You are told that teaching children to budget and save money creates responsibility. What if I told you that wealthy families never teach budgeting? This sounds logical because managing expenses and saving money appears financially responsible and practical. But something's wrong when careful budgeters stay broke while careless spenders build wealth. Most parenting advice emphasizes teaching children about money management and responsible spending habits early. Why do kids who learn budgeting become careful consumers while others become owners? Financial education appears valuable because budgeting teaches discipline and money awareness to children. But what if budgeting creates poverty mindset rather than wealth mindset completely? Think about your childhood money lessons and whether they focus on spending. Did your parents teach you to manage money or create money? The budgeting trap operates by convincing families that expense control leads to prosperity. If you want to understand why wealthy children learn business ownership while others learn careful spending, subscribe to Prof. Jong Explained and share this with someone who teaches budgeting. They need to see why ownership thinking beats expense management for wealth building. The system creates different relationships with money depending on your family's programming approach. When we say financial education, we mean different lessons based on mindset versus behavior. For budget-focused families, money education means learning to control expenses through careful planning. Children learn to track spending, compare prices, and make purchases responsibly through discipline. They measure success through savings account growth and avoiding financial mistakes over time. For ownership-focused families, money education means learning to create value through business thinking. Children learn to identify opportunities, solve problems, and build systems that generate income. They measure success through asset creation and income generation rather than expense control. Think about whether you learn to manage money or create money during childhood. Consider the difference between controlling expenses versus building income streams through ownership. This explains how different financial education approaches affect long-term wealth outcomes significantly. The difference isn't about discipline versus carelessness, but different relationships with money creation. But here's where it gets interesting about financial programming and wealth development mechanisms. The trap doesn't just teach expense control instead of income generation through ownership. It actually prevents children from developing the mindset necessary for wealth creation through business. When children focus on budgeting and saving, they learn scarcity thinking rather than abundance. This creates what economists call consumer orientation, where spending becomes the primary relationship. Meanwhile, children who learn business thinking develop abundance mindset through creation orientation. Consider how your financial education affected your relationship with money creation versus consumption. The budgeting trap becomes sophisticated when examining how it handles opportunity recognition completely. Budget-focused education typically emphasizes avoiding financial risks rather than evaluating business opportunities effectively. This risk avoidance prevents children from developing entrepreneurial thinking and opportunity evaluation skills. The safety emphasis creates what educators call security orientation rather than growth orientation. Children learn to protect money rather than deploy money for returns effectively. Meanwhile, ownership-focused children learn to evaluate risks and opportunities rather than avoiding uncertainty. Do you find yourself protecting money or deploying money when opportunities arise? What approach did your parents model regarding financial opportunities and business risks? The budgeting trap exploits what behavioral economists call scarcity conditioning in financial development. Children become focused on managing limited resources rather than creating unlimited resources through business. More expense control feels better than income generation because scarcity feels safer. This limitation focus prevents children from recognizing that wealth comes from creation rather than conservation. Choosing careful spending over business building feels rational when families emphasize security. Meanwhile, ownership-focused children learn that wealth requires creation rather than conservation through business. The budgeting trap creates what psychologists call employee mentality, where children expect payment. Children learn to receive allowances and earn money through chores rather than creating value. This payment orientation prevents business thinking and entrepreneurial development through creation activities. Employee thinking also prevents children from understanding how business owners actually create wealth. Meanwhile, ownership-focused children learn to create value rather than perform tasks for payment. They understand that business owners create systems rather than trading time for money. The budgeting trap creates expense obsession that limits children to consumer thinking patterns. Children become experts at managing spending rather than experts at generating income through business. This consumer orientation restricts financial thinking to expense management rather than wealth creation. Spending focus becomes problematic when children never learn how to increase income actively. They optimize expense management rather than building businesses that generate ongoing income streams. Meanwhile, ownership-focused children learn to build income rather than just manage expenses. But something more sophisticated happens with budgeting education and business development prevention mechanisms. The trap doesn't just prevent business thinking through expense focus and consumer orientation. It creates beliefs that business ownership is risky rather than necessary for wealth. Children learn to view business as dangerous gambling rather than systematic wealth creation. This belief system prevents entrepreneurial development and business opportunity recognition throughout their lives effectively. The risk perception also prevents learning how successful business owners actually minimize risk. Meanwhile, ownership-focused children learn that business ownership provides security rather than risk. They understand how to evaluate and manage business risk rather than avoiding opportunities. This knowledge provides significant advantages when identifying and pursuing wealth creation opportunities. The budgeting trap handles what economists call capital allocation in ways that prevent development. Budget-focused children learn to allocate money toward consumption rather than business investment and development. This allocation prevents capital accumulation necessary for business creation and wealth building. Consumer allocation also prevents children from understanding how capital creates wealth through business. Meanwhile, ownership-focused children learn to allocate capital toward business opportunities and wealth creation. They can evaluate investment returns rather than just tracking expense ratios and savings. The budgeting trap also exploits what psychologists call delayed gratification confusion in financial development. Budget-focused children learn to delay consumption, but never learn to invest effectively. This confusion prevents recognition that wealth building requires strategic deployment rather than conservation. Gratification delay also prevents children from understanding that business investment often provides better returns. Meanwhile, ownership-focused children learn that strategic deployment often generates superior outcomes. They can delay consumption while building assets rather than just accumulating cash. But there's something even more sophisticated happening with budgeting education and wealth creation prevention. The trap doesn't just create consumer thinking instead of business thinking patterns. It prevents children from understanding how wealthy families actually build and maintain wealth. Budget-focused children never learn about asset creation, business ownership, or wealth preservation strategies. This knowledge gap prevents recognition of how wealthy families actually operate and create generational wealth. The education also prevents learning about leverage, business systems, and income generation. Meanwhile, ownership-focused children learn how business systems create ongoing income without time. They understand how assets generate returns and how leverage multiplies wealth creation. This knowledge provides significant advantages when building and preserving wealth throughout their lives. The budgeting trap creates what economists call income limitation, where children expect payment. Budget-focused children learn that income comes from jobs rather than business ownership. This limitation prevents understanding that wealth requires owning income-generating assets and business systems. Income thinking also affects how children approach career development and financial planning later. Budget-focused children focus on salary optimization rather than business creation and ownership. Meanwhile, ownership-focused children understand that business ownership provides unlimited income potential rather than salary limitations. The budgeting trap addresses what behavioral economists call opportunity cost blindness in development. Budget-focused children cannot calculate returns on business investments versus saving money effectively. This blindness prevents recognition that business opportunities often provide superior returns than traditional saving. Cost thinking also prevents children from evaluating business opportunities that require initial investment. Meanwhile, ownership-focused children can calculate opportunity costs and evaluate investment returns. They can compare business opportunities rather than just avoiding expenses and risks. But perhaps the most insidious involves how budgeting education affects wealth creation timeline expectations. Budget-focused children expect wealth building to take decades through careful saving and management. This timeline prevents recognition that business ownership often creates wealth much faster. Budgeting also creates what educators call linear thinking, where wealth grows through addition. Budget-focused children believe wealth comes from adding savings rather than multiplying business returns. Meanwhile, ownership-focused children understand that wealth grows through multiplication rather than addition. The budgeting trap creates expense anxiety, where children become afraid of spending money. This anxiety prevents business investment and opportunity pursuit that requires initial capital deployment. Spending becomes associated with financial danger rather than strategic investment for returns. Meanwhile, ownership-focused children learn to distinguish between consumption and investment spending strategically. They can deploy capital for business opportunities without anxiety because they understand investment. This knowledge allows strategic spending for wealth creation rather than expense avoidance. The budgeting trap works by providing immediate satisfaction through expense control while preventing development. It allows children to feel financially responsible while limiting wealth creation opportunities. The system provides security feelings while creating limitations on business development and ownership. Children experience satisfaction through careful spending while losing opportunities for wealth creation effectively. Meanwhile, actual wealth building requires business creation and ownership rather than expense management. The trap perpetuates because budget-focused children who succeed often had advantages. They become advocates for careful spending while overlooking business opportunities that work. The successful examples obscure children who built wealth through business ownership and creation. And remarkably, the budgeting trap has convinced families that expense control creates wealth. When examining wealth patterns reveals that business ownership usually generates superior outcomes. Budget-focused children need business education rather than just expense management for prosperity. The budgeting trap represents effective mechanisms for converting business potential into consumer thinking. It transforms entrepreneurial energy into careful spending without requiring business creation or ownership. Understanding this trap doesn't mean avoiding financial responsibility, but recognizing business opportunities. It means teaching business creation while maintaining expense awareness through balanced education. If you want analysis of how financial education creates limitations rather than wealth, subscribe to Prof. Jan Explained. Share this with someone who teaches children about budgeting and saving money. They need understanding why business education provides superior wealth outcomes than expense management. The budgeting trap also creates what economists call poverty reinforcement in financial development patterns. Budget-focused children learn to accept limited resources rather than creating unlimited resources through business. This acceptance prevents recognition that wealth comes from expansion rather than conservation of money. The limitation acceptance also prevents children from developing confidence necessary for business creation later. Meanwhile, ownership-focused children learn to create resources rather than manage scarcity through business. They understand how to build income rather than just conserve existing money effectively. Consider how your financial education affected your confidence about money creation versus conservation. Did childhood lessons expand your thinking or create limitations about financial possibilities? The budgeting trap exploits what psychologists call risk misunderstanding in business development contexts. Budget-focused children believe that spending money equals risk while saving equals safety completely. This misunderstanding prevents recognition that not investing often carries greater risk than investing. Safety illusion also prevents children from learning how successful business owners actually manage risk. Meanwhile, ownership-focused children learn to evaluate and manage business risks rather than avoiding. They understand that calculated business risks often provide better security than saving. The budgeting trap creates what sociologists call class programming, where expectations get limited downward. Budget-focused children learn to expect employee wages rather than business ownership returns. This programming prevents pursuit of opportunities that seem unrealistic but might be accessible. Expectation programming also prevents children from developing ambition necessary for wealth creation later. Meanwhile, ownership-focused children learn to expect business success regardless of starting position. They develop confidence through understanding wealth creation rather than just money management. But there's something even more sophisticated about how budgeting education affects networking and relationship building. Budget-focused children learn to view money as private rather than social through individual management. This private orientation prevents learning how business networks actually create wealth through collaboration. Individual focus also prevents children from understanding how wealthy families use relationships for business. Meanwhile, ownership-focused children learn to build relationships that create business opportunities and wealth. They can collaborate rather than just managing personal finances in isolation. The budgeting trap also exploits what behavioral economists call time preference errors in development. Budget-focused children learn to optimize short-term expense control rather than long-term wealth creation. This temporal focus prevents strategic thinking about business development and asset creation. Time thinking also affects how children approach goal setting and achievement throughout their lives. Budget-focused children focus on saving targets rather than business objectives and wealth creation. Meanwhile, ownership-focused children understand that wealth goals require business creation rather than expense. The budgeting trap addresses what psychologists call identity formation, where self-concept gets shaped permanently. Budget-focused children develop identities as careful consumers rather than business creators and owners. This identity prevents entrepreneurial thinking and business opportunity recognition throughout their lives. Consumer identity also prevents children from seeing themselves as capable of business ownership. Meanwhile, ownership-focused children develop identities as creators and business builders from early ages. They can pursue business opportunities because they see themselves as business owners. But perhaps most devastating involves how budgeting education affects financial independence timeline expectations. Budget-focused children expect financial independence to require decades of careful saving and management. This timeline prevents recognition that business ownership often creates independence much faster. Budgeting also creates what economists call wealth accumulation confusion, where growth mechanisms get misunderstood. Budget-focused children believe wealth comes from expense reduction rather than income expansion. Meanwhile, ownership-focused children understand that wealth grows through business multiplication rather than saving. The budgeting trap creates what sociologists call middle-class programming, where aspirations get capped. Budget-focused children learn to aspire to comfortable consumption rather than business ownership and wealth. This aspiration prevents pursuit of opportunities that could create generational wealth. Class programming also prevents children from understanding how wealthy families actually operate financially. Meanwhile, ownership-focused children learn wealth strategies that wealthy families use for generational success. They can implement wealth building rather than just careful money management. The budgeting trap also creates what economists call asset blindness, where ownership opportunities remain invisible. Budget-focused children never learn about real estate, businesses, or investments that create wealth. This blindness prevents recognition of opportunities that surround them constantly. Opportunity blindness also prevents children from developing skills necessary for asset evaluation and acquisition. Meanwhile, ownership-focused children learn to identify and evaluate assets that generate income. They can recognize business opportunities rather than just expense management techniques. But there's something more sophisticated about how budgeting education affects tax understanding and strategy. Budget-focused children learn to pay taxes without question, rather than understanding tax optimization. This acceptance prevents learning how wealthy families actually minimize tax burden through business. Tax ignorance also prevents children from understanding how business ownership provides tax advantages. Meanwhile, ownership-focused children learn tax strategies that business owners use for wealth. They can optimize tax burden rather than just accepting whatever taxation occurs. The budgeting trap addresses what behavioral economists call leverage aversion, where debt becomes universally feared. Budget-focused children learn that all debt is dangerous rather than understanding strategic leverage. This aversion prevents business opportunities that require intelligent debt use for growth. Debt fear also prevents children from learning how wealthy families use leverage for wealth. Meanwhile, ownership-focused children learn to distinguish between good debt and bad debt. They can use leverage strategically rather than avoiding all debt opportunities. The budgeting trap also exploits what psychologists call financial learned helplessness, where control gets abandoned. Budget-focused children learn to accept market returns rather than creating their own returns. This helplessness prevents recognition that business owners control their financial outcomes more effectively. Helplessness also prevents children from developing confidence necessary for business control and ownership. Meanwhile, ownership-focused children learn that they can influence their financial outcomes through business. They can create wealth rather than just hoping for market performance. But perhaps the most insidious aspect involves how budgeting education affects generational wealth planning. Budget-focused children never learn about estate planning, trust structures, or wealth preservation strategies. This ignorance prevents building wealth that transfers to future generations effectively. Generational blindness also prevents children from understanding how wealthy families maintain wealth across generations. Meanwhile, ownership-focused children learn wealth preservation and transfer strategies from successful families. They can build generational wealth rather than just personal savings accounts. Understanding this trap doesn't mean avoiding financial responsibility, but recognizing wealth creation opportunities. It means teaching business thinking while maintaining expense awareness through balanced financial education. If you want analysis of how financial education creates limitations rather than wealth, subscribe to Prof. Jung Explained. Share this with someone who teaches children about budgeting and saving money. They need understanding why business education provides superior wealth outcomes than expense management.